Today on the blockchain report, Bitcoin surged up past 116K, and it might be because the Fed just exposed an $863 billion gold lie, the kind of hidden stash that could bankroll Trump's entire Bitcoin empire. BlackRock dumped 366 mil in Bitcoin and ETH, proving even Wall Street's golden boy panic sells. Kanye launched a Yeezy Money meme token. It hit $3 billion, then cratered to $1 billion, proving the only thing harder to hold than Kanye's attention span is his coin. And we'll be joined by Mark Moss in just a bit. All that and more. Let's go! All right, good morning. Well, we are starting things off today with some breaking news on today's episode of the Blockchain Report. Thanks as always for joining us. I'm Hank Hudson, your host. Let's get into it. So, Jerome Powell, he walked up to the podium at Jackson Hole minutes ago, and for once, he didn't set the financial world. And for once, Jerome Powell, well, he walked up to the podium at Jackson Hole just a few minutes ago, and he didn't set the financial world on fire. Surprise, surprise. Instead of his usual, I'll crush inflation with my bare hands routine, Powell struck a new tone. He admitted that, yes, inflation risks are still tilted to the upside, thanks largely to Donald Trump's tariffs carnival, but he also admitted the labor market is losing steam. So what did he do? Well, he rolled out a shiny new Fed framework and basically all but admitted rate cuts are on the way. Now, the markets reacted instantly. Stocks ripped to new all-time highs. So what does this mean for Bitcoin, though? Well, it's pretty simple. Lower rates equal weaker yields, a weaker dollar, and stronger risk assets. That's a recipe Bitcoin knows how to cook with. If Powell follows through, BTC gets another shot of adrenaline, the kind that makes candles go vertical, but Powell also threw in a warning. Tariffs could keep inflation sticky, which means this isn't party on forever mode. It's more like party while the cops are circling the block. Now, volatility isn't going anywhere. Bottom line, Powell blinked, the markets cheered, and Bitcoin just got a green light with a few flashing hazard signs. Let's see how the charts are reacting with my main man, Luca Pagano, our chart shark and crypto wunderkind. Luca, let's do it. Run the stinger.
Oh, it's beautiful, Hank. This is not financial advice.
Sorry, guys.
Luca, how are you this morning, my friend? Thanks for joining us. It is a fabulous day in the markets. How are you feeling today, bud?
Hey, Hank, how's it going? It's a pleasure to be here as always. So thank you for having me.
Oh, the pleasure is mine, buddy. And what a pleasure this morning is. We saw Bitcoin like an hour ago creeping toward 111K. Jerome Powell gets to the stage, says a couple of words, and all of a sudden we're back up to over 116.5. How are you feeling about the market's movements this morning? It feels pretty good.
I mean, it's honestly amazing, you know, because we've been looking at the charts last week, thinking about this, you know, the potential pullback into the $110,000. I think we got it honestly very clean. So glad to see that happening, and we woke up today with an amazing volatility, you know. So that's always beautiful to see. Bitcoin's popping out right now with all the other icons following up. Also, the icon market very strong. So I think we're gonna have a fun show today, Hank.
Yeah, Jerome Powell's kind of the financial version of Mr. Miyagi. It's either risk on or risk off. And right now it looks like risk on is the tail of the tape. Now, I know we've talked about this in the show many a times. The weekend close is very important for Bitcoin's momentum as we go forward. What do we need to look for today to hopefully see that next surge into potentially new all-time highs? This is some of the best news we've had in a couple of weeks here.
Yeah, I think you nailed it with that, Hank. Because let's take a look closely before on the weekly time frame. You know, then we'll go deeper. You know, I always love to see the big picture. So let's take a look at that. if we see the weekly, honestly, right now it's looking amazing. If we had this call yesterday, I would have told you different, to be honest, because we were pulling back as we've foreseen. But things started to get a little bit heavy, and honestly, that's also a great recipe for the short squeeze. I love a great short squeeze, and I think we're seeing quite much this with BTC. We've taken the low on the last week of July, which is awesome to see, and we're basically recovering almost fully. So if we can close this week green, that would be basically above 117, mid 17s. That would be an amazing week to wrap up. Which it already looks good, to be honest, but that would be a great win.
Yeah, absolutely. And with a potential short squeeze coming, you love them, I love them. What do you think we could be seeing going forward, toward the end of the month here? We're almost closing out August. We got about a week left. Ethereum is just beckoning to reach new all-time highs now at that $4,600 level. Do you think we might see some new all-time highs for Ethereum in the near future? And what about Bitcoin? 124 doesn't seem too far off now when we just jumped like $5,000 in a matter of, minutes this morning.
Exactly. I mean, here, Hank, what I see honestly is we have a very clean chart, at least in my perspective. Of course, for the folks that are watching us, this is not financial advice. This is just my views of a chart lover. So for me, I see this channel, which we came back late all-time high. After the all-time high, we came down. We tested again this low channel area. Charts are looking very clean. So what would I expect, honestly? If we happen to close above $117,000, as we were saying, I honestly think we're going back up to test those highs. The key area here, Hank, for us not to lose, I won't be liking us to go back below $114,000, honestly, because this was the latest block of demand. We already tested the lows again. I mean, if we're gonna be going lower than $114,000, for me, this is going much lower, say to 100, low 100 areas, right? So that's for me the take. So this awesome push we had the last couple of hours, if we put this in a 4 hour, we're exploding right now, So for me, the play is I'm long right now. This is not financial advice. I would bid the area of 114, 115 if we get it. And not looking to go lower on that. For me, validation is on the 113s to lower. We should be looking to recapitulate. So markets are looking green, beautiful. The next trigger of hires is above $116,000 $117,000, and we should be looking for fresh highs. So let's see what the market gives us.
Let's go, buddy. I love when I get to talk to you in the morning and we see a giant green candle just like that. It makes me think of that Omega candle we're always hearing Samson Mao talk about. Amazing, Luca. Well, we got a busy show today, but we certainly appreciate you and your time and expertise as always, Luca. Before I let you go, I know we've probably got a lot of little baby chart sharks out there in our audience who are just fiending for more of your insights. What's the best place they can go to see everything that you're talking about in the markets each and every day?
Yeah, I mean, you can visit me at Luca at Roxom, and when we're ready to post some charts, we'll do it there. So thank you for having me as always, Hank, and the best of luck on the show. Great guests out there, so we'll be sticking in to see it.
We got a packed house today, and we appreciate you as our opening act this morning. It's always a pleasure, Luca, and I hope you have a great weekend, buddy.
Bye-bye, Hank. See you then.
Cheers. All right, we're taking a quick break, but when we're back, we're going to be joined by our first special guest of the day to talk shop and talk over our biggest and best stories of the morning. So stay tuned. More Blockchain Report right after this.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back. It's time for this morning's Bull Run, where we cover the top stories of the day. And this morning, we're going to be joined by our first special guest who's going to run over those stories with us. Now, this gentleman has led digital transformations at Fortune 500s. He's overseen billions in IT strategy and taught students about everything from AI to quantum computing. He's built global teams, modernized massive systems, and now connects those lessons to the world of Bitcoin and financial freedom. Let's give a big blockchain report welcome to Lee Winbush, better known online as Mr. Lee. Mr. Lee, how are you this morning? Thanks for joining us. We and our audience are thrilled to have you. How are you today?
Yeah, thanks for having me on, Hank. Appreciate the intro. It was very kind.
Oh, we're thrilled to have you. And for some of our audience that might not be familiar with you yet, Mr. Lee, you've led digital transformations at Fortune 500s, taught students about emerging tech, and become a strong advocate for Bitcoin. So can you kind of give us your introduction for people you're meeting for the first time? Because there's a lot of people in our audience that are excited to meet you.
Yeah, absolutely. I mean, I like you said, I grew up in the information technology space and have just been blessed to have a pretty cool career, just kind of growing through first smaller companies and then eventually, as you said, larger Fortune 500s, and gained a lot of skills along the way. Wasn't actually a great student in high school, which is kind of funny because then later I did come back and finish my graduate degree and was invited to come be an adjunct professor on emerging technology. And that's really where I finally started to learn about Bitcoin, kind of dabbled in the various cryptos that were out there, but eventually about a year and a half, almost 2 years ago, really started going down the Bitcoin rabbit hole, reading all these books behind me, and just really focused my energies there. I really see that as the future of money.
Absolutely. And as we know and we've seen time and again, you got to educate yourself on Bitcoin. And then the second you do, we all orange pill ourselves. And it looks like you've got plenty of reading material back there that seems to do the trick. I want to start this morning talking about our breaking news that we had at the top of the show. Specifically, Jerome Powell came out and basically just admitted that rate cuts are underway. Praise the Lord. Hallelujah. With September now looking like a lock for rate cuts, how do you see that playing into Bitcoin's short-term price action going forward into the month of September?
So Bitcoin is interesting. I mean, obviously similar to gold, but obviously digital and reacting with a lot greater volatility than gold. It's going to see that liquidity and sniff it out and definitely rise. I mean, I'm looking at this ginormous candle on the 4-hour right now, up almost 4% on the day, and so clearly it's sniffing that out. It's seeing that we're going to have rates start to drop. I actually posted on X, I believe it was yesterday. You know, I kind of suspected it was going to be a sell the rumor, buy the news, kind of a flip of what it typically is in TradFi, because I was really seeing big Bitcoin treasury companies, which I follow pretty closely, like the MicroStrategies and Metaplants of the world, really all kind of taking a shellacking in the past couple of weeks. And then now I see a lot of them all starting to turn around. I'm seeing the Bitcoin miners turn around and react regressively. So I suspect that this reduction in rates is really going to put a risk on feel back into Bitcoin risk assets.
Yeah, no, I would have to agree with you. And we probably shouldn't be too surprised that we were kind of waiting for these Bitcoin treasuries to see some more of that volatility that we've experienced from Bitcoin in the future, given how closely tied they are. So really no surprise there. And with Bitcoin back riding the wave in a positive fashion, it's not surprising to see those follow suit as well. Now, the Fed has this tricky thing they got to do, which is trying to balance a weakening labor market with sticky inflation due to Donald Trump's tariffs. Do you think Bitcoin thrives in a more weaker dollar environment, or does persistent inflation actually kind of complicate that narrative a little bit?
You know, it's interesting. I mean, I think if you think about like long run, the way the whole monetary system is, where we have a debt-based money system, We've pushed rates to near zero, right? In the ZIRP era after the great financial crisis, they really have nowhere else to go but up. So to my knowledge, I'm not really surprised to see long run rates start to increase. We're going to have long run inflation. There's just not much you can do about it. We've printed 30% of the money that ever existed in the last 5 years. So that's got to go somewhere. That's going to find its way into obviously risk assets, real estate, all kinds of things that people want to buy. So inflation's here to stay. I mean, I think that the idea that we're going to get back down to a 2% inflation rate, it's a dream. In fact, it's funny. I actually remember listening to an interview with Anthony Pompliano a few years ago, talking about, I think eventually the Fed's going to have to move their 2% target to a 3%. I don't think they'll actually do that verbally, but it's going to happen tacitly, right? And that's what's going to happen. Bitcoin, though, is still going to, I think, react very, very favorably, because as we see rates come down, we're going to see more liquidity. I was listening to Bloomberg a little bit earlier today, and there was some talk about stopping the runoff of the balance sheet for the Federal Reserve. So, as you know, they've grown their balance sheet by trillions of dollars over the recent years, and they've been slowly trying to let assets roll off their balance sheet. I'm sure they're going to stop that, and then before you know it, they're going to have to probably start growing the balance sheet again. That liquidity is going to have to find a place to go, and it's going to find its way into QQQ, it's going to find its way into the SPY, and it's going to find its way into Bitcoin.
Yeah, and we're seeing it this morning. I mean, Bitcoin, Ethereum, all of those are ripping. Meme coins even seem to be getting a nice little pump. And stocks are ripping to all-time highs, like literally the second after Powell opened his mouth. And treasuries, well, they kind of cratered today. Do you think that Bitcoin right now is trading more like a, high beta risk asset in these moments, or is it kind of slowly maturing into its own macro hedge?
It's going to take more time, I think, for Bitcoin to really trade what I think it is. What I think, and what most, I think, followers of Bitcoin believe it is it's the ultimate risk-off, low-risk asset to hold. Because they're really looking at the monetary system that we are in, this debt-based monetary system, as being far more fragile than I think what the news media and others are letting on. So as a result, it's the safest place to be. It can't be controlled. It can't be debased. It's limited to 21 million coins. All of those things that Bitcoiners know, the broader market doesn't yet understand. So long term, it is, I think, the safe haven asset, like gold has been for the last 5,000 years. Today, it continues to trade as risk on, right? So it does trade, I think, as beta, especially to tech stocks like the QQQs, Tesla, the Mag 7, et cetera. But there's going to be a time. There's going to be a time where that switch is going to flip, and folks are going to start figuring that out.
Yeah, and I think we're seeing that happen slowly but surely. If you look at Bitcoin's volatility this year, it is so much more subdued than we've seen in previous cycles. So it's kind of funny how it has been traditionally considered a risk-on asset, but those like you and I that have done their research know that this will be the digital gold, the gold of the future. So we are seeing that, I think, slowly but surely up and to the right. 16 years we've got right on track record right now, and it seems to continue to do so. Back to Powell. During his speech this morning, he made a big point about Fed independence, even as Donald Trump threatens Fed governors on the sidelines here. Do you think Bitcoin's whole outside the system pitch gets stronger the more political the Fed looks?
Oh, absolutely. I mean, if we think that the Federal Reserve and the whole central banking system is not political, then you're probably not paying attention. I mean, everything that has to do with DC, Wall Street, they're all political. I mean, political is just, that's human nature. So Bitcoin continues, I think, to thrive. I mean, you've seen Larry Fink out there pounding the pavement with the spot Bitcoin ETFs, talking about it as, a hedge if you're worried about your currency, you're worried about your government, you're worried about inflation, you're worried about deficits that your government is running, and all of those kinds of things. And so as folks start to see that, and we've seen, record inflows, right? The IBIT ETF's been one of the best performing ETFs in history in the United States. And so clearly that message is resonating. You're seeing, sovereign wealth funds acquiring either Bitcoin through ETFs, or they're acquiring Bitcoin exposure through things like Strategy Inc., formerly MicroStrategy. You're seeing, central banks start to do the same. You're seeing endowments, retirement funds start to move into Bitcoin and Bitcoin related treasuries. So, clearly people are seeing, at least the smart money is starting to see like, hey, wait a minute, we're not going to be able to get our way out of this. If you think the government's going to pay off its debt, like that's not going to happen. We're in a debt-based system. If you pay off the debt, the money disappears, and banks collapse. Right. So we don't want that. So they're gonna continue. The debt's gonna keep growing. Deficits are gonna keep growing. And so Bitcoin is not a hedge against inflation. It's really, I think, a hedge against the whole monetary system.
Yeah, absolutely, absolutely. And if we really are entering a rate cut cycle here, and this wasn't just Jerome Powell giving us lip service this morning, what's your long-term view? Does Bitcoin simply benefit from the liquidity wave, or does this moment supercharge its path toward being seen as a true and genuine reserve asset class?
Well, it's interesting. If you look at the chart of Bitcoin, I'm kind of looking at it now, and you look back at the past of these huge boom and bust cycles, kind of following liquidity. I think that Lynn Alden's done really good work on this and has shown that Bitcoin really kind of follows that liquidity. And then you watch Bitcoin on the chart from January of 2024, when the spot Bitcoin ETFs, went live. And now it's this nice grind higher, stair step, consolidate, stair step up, consolidate, stair step up, consolidate. Kind of up and to the right. And so the question that I'm still wrestling with is, do we see a whole, bunch of leverage come into the system and people kind of get reckless, and then we have another blow off top and then a tank back, maybe 50, 60%? Or do we just grind higher to $1 million, by 2030, which is kind of what I expect. I think we'll hit $1 million by 2030. And do we just kind of grind higher? Look at GLD. When GLD, the gold spot, the spot gold ETF launched, it was just like an 7-8 year bull run. It just kept going up. So could Bitcoin do that? I think it's very plausible.
Yeah, I mean, I think we're at a point in Bitcoin's journey, and we've heard it from top names like Bitwise CEO Matt Hogan, that the cycle narrative might be a thing of the past. It looks like with all this institutional money flooding into the Bitcoin space, we have a lot more stability, and that's kind of what we've seen this cycle. And a lot of people will expect that to continue into 2026. People think the bull run, some think it might not end until 2027 due to this new era that we're seeing here in front of us. But I guess only time will tell. Either way, happy tidings this morning for sure. All right, stay tuned, Mr. Lee. We're going to read this next story and bring you right back to chat about it, because Federal Reserve Chair Jerome Powell, who we've been talking about all morning, President Donald Trump, and Treasury Secretary Scott Bessent are sitting on an $863 billion secret. A newly published Fed paper all but spells it out. The U.S. has been lying about its gold holdings since 1973, and that accounting trick could bankroll Trump's Bitcoin ambitions. The Fed study is called Official Reserve Revaluations, the International Experience, which is a polite way of saying, here's how broke countries revalue gold to pretend that they're not broke. The paper examines examples like Germany, and buried in the footnote is Cynthia Lumley's revaluation, there she is, to fund a U.S. strategic Bitcoin reserve. Now that bill matches Trump's stated goal, 1 million Bitcoin to make the U.S. the world's crypto superpower. The numbers are staggering. America's official gold price is around $42 an ounce, the Nixon-era fiction that still is on the books. Actual gold trades around $3,400 an ounce, which means the U.S. balance sheet shows $11 billion in gold when the real value is around $874 billion. That's off by a factor of 80. Now, that's $863 billion gap is big enough to buy Denmark and Portugal and still have cash left to fund Finland's national sauna habit. Now, Treasury Secretary Scott Bessent recently posted about budget-neutral ways to buy Bitcoin. In Washington, budget neutral means we found hidden money we swore didn't exist. Bessent denies plans to revalue gold. He told Bloomberg earlier this year that's not what he had in mind. And then the Fed publishes a literal instruction manual on gold revaluation. This comes as Trump wants 1 million Bitcoin. The U.S. already has about 200,000 Bitcoin from seizures. That leaves 800,000 to buy, costing about $92 billion. Exactly the kind of cash you'd free up by revaluing Fort Knox. The politics are messy. The Constitution says only Congress can revalue gold. The president can't do it with the Truth Social post, believe it or not. Lummis's bill is ready, but admitting America has been lying about money for 50 years is not exactly a winning midterm slogan. The economics, well, they are kind of ugly. The U.S. has $37 trillion in debt. The dollar is down 11% this year. Its worst showing since 1973. And if gold is revalued, Treasury yields could spike to 7% or more. That means mortgages jump, savings lose 30% overnight, and your 401k suddenly looks like a horror film. Meanwhile, China and Russia, who have been hoarding gold like preppers hoard canned beans, win either way. If the U.S. revalues, their reserves explode in value. America validates their anti-dollar strategy while making them absolutely rich. The real problem, though, is admitting the original sin. You see, Nixon killed Bretton Woods in 1971, claimed the Fed's steady hand would replace gold. Then the Watergate tapes revealed Nixon telling the Fed to goose the money supply. Since then, the dollar has lost 98.7% of its value against gold. Every Treasury Secretary since has protected that lie like it's a state secret, because admitting it would be like the Pope admitting God doesn't exist. Just too big to fail. Now, with debt exploding and dollars imploding, the lie has no road left. Strip it down, and here's the truth. We're not hiding $863 billion. We're hiding the fact that fiat money is a 50-year Ponzi scheme. And Bitcoin is the exit ramp. All right, we're bringing back Mr. Lee. Mr. Lee, turns out America still values its gold at $42 an ounce, which is basically monopoly money. Is this really a hidden $863 billion war chest or just creative accounting on steroids? What do you think?
Well, I mean, it's definitely creative accounting. I mean, what would be the rationale, to keep Bitcoin, keep gold, analog Bitcoin, as $42 an ounce on the balance sheet, right? And the rationales that I've certainly heard is, hey, gold's not important anymore. Fiat currency is enough after 1971. Don't look over there, look over here at the mighty dollar, right? That's going to stay strong. And obviously that was not the case. So this seems like a pretty emergency break glass type of a call that could be made. Is let's revalue the gold, and then now what do we want to do with that? Do we want to pay down the deficit? Do we want to acquire a hard asset like Bitcoin? Are we truly on a kind of monetary order reset, as Scott Bessent talked about before he became Treasury Secretary last year? A lot of questions on the table. I think another interesting question is, do they revalue the gold just to current price, right? I mean, if you look at the current price of gold at $3,300 an ounce, or do they revalue it to $4,000, $5,000, $6,000? You can revalue to whatever you want to try to plug the hole on our balance sheet. So it'll be really interesting to see kind of what they end up doing with it. But I think eventually they're going to have to do this. They'll have no choice.
Yeah. Yeah, I think you're right. But let's say, for instance, let's play a little theoretical game here. If Uncle Sam actually started using that $863 billion to buy Bitcoin, do you think we're talking smooth accumulation or a Black Friday stampede at Walmart kind of market chaos? What do you think?
Well, that's a good question. I mean, I tend to think that they would probably move pretty thoughtfully and cautiously, but this is the government we're talking about, so it's hard to say. I mean, certainly an immediate, just a slam purchase of that much Bitcoin all at once is going to just drive the price into the stratosphere. I mean, that's not at all priced in. Now you could be talking hundreds of thousands of dollars per Bitcoin overnight. Is that really something that they're going to do? No. Plus, I think, what message would that send to broader markets, to other central banks, to global markets? I think it would create an absolute panic. So my guess is it's probably more of a gradual thing, or maybe some of it goes into Bitcoin to bolster the strategic reserve, and maybe some of it is kind of used to go back into paying down, quote unquote, the deficit. That could be a couple of options that I could imagine. Worst case scenario, if something were to occur, some kind of black swan comes out of nowhere, it goes into helicopter money, which would be the worst case scenario, as we saw in 2020. So those are a couple of things that I can think of that how they'll approach it. I'd be pretty surprised to see them just smash buy Bitcoin all at once like Michael Saylor.
Yeah, I think you're probably right. I was not familiar with the term helicopter money until today, so thank you for adding that to my lexicon. That's a good one. I appreciate that. All right, hang tight here, Mr. Lee. We're going to read this next story about BlackRock, and we're going to bring you right back because we want to talk about BlackRock, the asset manager that usually treats Bitcoin like its golden child, just did something kind of shocking. They dumped $366 million worth of Bitcoin and Ethereum in one day. Data from Look-On Chain shows the specifics. Over 1,800 Bitcoin worth about $112 million and nearly 60,000 Ethereum worth about $255 million, all transferred to Coinbase Prime. And when you move that much to an exchange, it's not because you're hodling harder. This rare move happened on August 20th, right in the middle of a broader market sell-off. So naturally, traders panicked like they'd just seen their ex walk into a bar. They hate that. Now, BlackRock is famous for recording daily inflows into its ETFs. Instead, they broke the streak with a massive outflow. Think of it as Bitcoin's version of your friend who's been sober for years suddenly showing up at a brunch double fisting mimosas. Now, they haven't said why yet. Speculation ranges from taking profits to portfolio shuffle to Larry Fink wanted a new Gulfstream jet. But the timing couldn't have been much worse. Bitcoin and ETH prices kept falling after the transfer, and everyone started whispering, is this just BlackRock cashing in or the beginning of an institutional fire sale? To add to the drama, just last week, headlines said that BlackRock was still buying ETH, which makes this move the financial equivalent of texting "I love you" and then just ghosting someone. Traders are now on high alert because when the world's largest asset manager sneezes, the whole market seems to catch a cold. And this wasn't a sneeze, it was a cough straight into Bitcoin's face. We're bringing Mr. Lee back. Mr. Lee, BlackRock just dumped 366 mil in Bitcoin and Ethereum in one day. Is this a smart portfolio move, or did Larry Fink just get bored of hodling? What are your thoughts?
Well, again, it kind of depends, right? So we have to think about BlackRock as a couple of things. I mean, they certainly could hold Bitcoin and Ethereum to place into other funds that they offer. And then, of course, there's the custody of Bitcoin and Ethereum for their spot ETFs that they have, in the market. So, for the latter pool of funds, some folks do kind of get lettuce hands, right? And they can't hold on to, really high volatility assets. I mean, as you said earlier, Bitcoin's, volatility has definitely come off over the last year and change as we've had these spot Bitcoin ETFs and have had more institutional flows, but it's still a very, very high vol asset. I mean, it's, I don't trade Bitcoin. I buy it and hold it, but I certainly trade some of the treasury companies and Bitcoin miners. And so a 2 or 3% move to me is kind of like, that's really nothing, right? But for the market, for most investors or people that are retirees or what have you, 2-3% is a huge move. And so some of that could just be lettuce hands, just frankly saying, I can't hang on to this asset, but still look at the size of these funds. They're enormous. This is just a rounding error in what's really kind of coming off of these funds. They're still, I don't know what, I haven't seen IBIT's, recent size lately, but I mean, it's, $70-80 billion or more. So this is just some lettuce hands, I think, kind of getting shaken out by some of the downward pressure over the last couple of weeks leading into Jackson Hole. And if they sold, I mean, they're probably not feeling so good today, right? They're probably not feeling very smart.
Yeah, take that, Larry. But you got to ask yourself this question, I feel like. When the biggest asset manager sneezes, crypto as a whole seems to catch a bit of a cold. Should Bitcoin really be this sensitive to one firm's hiccups?
Well, I mean, think about so for us that are Bitcoiners, we look at it as a $2 trillion asset, and that seems enormous compared to its journey over the last 16 years getting monetized. But folks, there's $1,000 trillion of value in the world. Kind of hat tip to Jesse Myers and the work that he's done to look at all of the wealth in the world. Bitcoin's tiny, it's a fraction of a percent. So it doesn't, a large whale like a BlackRock, et cetera, they could move the market. Absolutely. But as Bitcoin continues to grow, as it gets to be a larger and larger percentage of that 1,000 trillion, one quadrillion, I'm not used to using that term, but as it becomes a larger percentage of that quadrillion of global wealth, then I think you're going to see less and less individual whales being able to move it, even large entities like BlackRock, assuming Bitcoin continues to decentralize. I mean, I think one of the risks we see is individual holders have been selling, old whales have been kind of cashing in, and treasury companies and ETF issuers are gobbling it all up. And so the way that Bitcoin is held is definitely changing, but I think it'll continue to decentralize and not be moved by just one or two players.
Yeah, I think that seems to be the way that the market is moving right now, as we see more companies put Bitcoin on their balance sheet, not just strategy with 600,000. It's definitely, I think, going to make a more I don't know if equitable is the word, but it's going to be less affected by these large movements. And even so, this year, we've seen some pretty big moves when Galaxy Digital unloaded like 80,000 Bitcoin over the course of a weekend. The market went down $3,000 and then recovered almost instantaneously. I think it was within the next day or two. So I think we're seeing a lot more stability there based on very much what we were talking about here. So up and to the right, baby. All right, so we're going to get into with you a little bit deeper here, Mr. Lee, in our deep dive. So guys, let's roll the stinger and get on into it. All right, it's time for our deep dive with Mr. Lee, where we get a little bit more in depth with the man himself. Now, Mr. Lee, I want to talk about your role at MassMutual. You manage technology for over 28,000 employees. Do you think big corporations are ready to integrate Bitcoin into their systems, or are they still in that denial stage we've seen from a lot of other industries and companies right now?
Yeah, I can't talk a whole lot about my particular employer, but I can maybe speak more generally, right, about kind of how these things settle in. And I think it's very, very early days. When you think about different companies, whether it's looking at treasury strategies, whether it's looking at what are they doing on their balance sheet with technology adoption, all of these things are very, very early days from a Bitcoin perspective. So what you're going to see, I think, in terms of adoption, specifically speaking about Bitcoin, is it's those founder-led companies. I really think it's those companies that are, you've got somebody like a Michael Saylor, right, that maybe owns a lot of the stock of the company, or maybe it's private, and they will choose to say, hey, wait a minute, I'm having all this money sitting in treasuries. It's a melting ice cube. I need to do something different. And so they're starting to adopt other strategies, like adopting a Bitcoin treasury strategy. You saw that then with Semler Scientific, right? You saw that with Metaplanet, a hotel company in Japan. Semler is a healthcare company. And then you're seeing other companies kind of adopt that strategy. So again, but most of them they're either founder-led, they are maybe, their backs are kind of up against the wall as like a zombie company. So there's some dynamics at play that you see that companies, when they adopt a Bitcoin strategy, that seem to be pretty consistent. I think it's going to take a lot longer for larger entities to kind of get interested. And one of the ways that's going to happen is look at what Michael Saylor is doing with strategy with these preferred equity offerings. So he's putting out these fixed income instruments out into the marketplace for investors who maybe have no interest in Bitcoin at all. But what they're looking for is yield, and everybody's starved for yield. So he puts out these instruments for 6, 7, 8, 9, 10% interest, and they're massively over collateralized by Bitcoin. So now imagine pension funds, insurance companies, et cetera, start to say, hey, let's put some of that on our balance sheet because we need yield, and treasuries, frankly, aren't going to get that yield for us. And so he's siphoning or kind of pumping those fiat dollars onto his balance sheet and putting that right into Bitcoin, an asset that's growing 40, 50% a year. So I think that's maybe where you start to see the adoption among larger companies, is as these preferred fixed income instruments tap into that $300 trillion fixed income market. Maybe that's where Bitcoin adoption starts to build.
Yeah, that makes a lot of sense. And as someone who has managed multi-million-dollar budgets themselves, I want you to put on your CEO pants for a second. If you were sitting on corporate cash today as the CEO of a big company, would you allocate a slice to Bitcoin? If so, what percentage? And how would you justify a move like that to a boardroom that's been hesitant to do so far?
Well, I think Saylor really laid out the playbook on doing that. I mean, the very first thing is kind of getting educated on money, because it's so it's so interesting. Even executives, folk PhDs, like there's a lot of folks that are in TradFi or on the news media or on boards that maybe really don't understand money. I mean, I think there's been some really good interviews on this, and so first have to understand what money is, and then second have to take the board through that same journey. So that you understand the problem, right? Because part of this thing is, if you bring Bitcoin to a board, it's like, well, what problem are we trying to solve here? And it's like, well, look at our money, look at inflation, and people say, oh, well, inflation's like 2 to 3%. No, it's not. If you look at M2 money supply growth, it's more like 7 to 10%. And so if you've got anything that's not getting you 7 to 10%, you're immediately, from a real yield perspective, you're losing money. And so that's like the first hurdle I think that you have to kind of get the board over. Then say, okay, what are the alternatives? So we could do an acquisition. How often do acquisitions work, right? Sometimes they do. Oftentimes they don't. They don't yield the results that you anticipate. Oh, well, we could, invest in this or invest in that. And eventually you get to Bitcoin and you say, okay, wait a minute, you've got this asset that's been growing for 60% a year in the last 10 years. Yes, it is starting to taper off, but it beats everything else in the market. So why wouldn't you take some of that treasury, some of the money that maybe you have sitting in treasuries, T-bills, that you're getting 4% today. But again, that means you're losing 3% if you look at money supply growth, and look at something like Bitcoin, take a small allocation. I think you're seeing a lot, again, not financial advice, but you are starting to see some of the issuers like Bitwise, like Fidelity say like, hey, start with kind of a 1 to 3 allocation, 1 to 3% allocation. And even doing that and still being invested in bonds and S&P, you have a far better return than you would just a straight kind of 60-40 type of portfolio. Now, again, we're talking corporations. So for them, it's more about, that cash and marketable securities and treasuries. But even if they took like 1 or 2 or 3% of that and started moving over to Bitcoin on a risk adjusted basis, it dramatically improves their return profile.
Yeah, it's still a little puzzling to me because if you spoke to pretty much any traditional financial advisor and said, listen, I know of a stock that over the next 10 years will likely 10x, almost definitely. If you look at its history, it's not going to go as parabolically fast as it did before, but 10x in the next 10 years, everyone would just say, take my money, put it wherever you want, if that's what's going to happen, right? But it almost feels like Bitcoin has become a victim of its own past successes, where it had these parabolic rises, and now people think that they're late. And in fact, before we had our time with you today, I was doing a little tweet creeping on some of your tweets to kind of get a gist of what you've talked about in the past. And one thing I saw that was interesting is it said that you started buying Bitcoin at around 42K. And at that time, you thought that you were late. What ultimately flipped the switch for you from being too late to saying, we'll never see that price again?
Yeah, that's a really good question. And it's a common story of Bitcoiners, right? Even ones that come when it was $1,000 and start buying like, I'm late, I'm like, I got to get caught up. And for me, you had to start thinking, I had to put a real thesis together of like, well, what do I think Bitcoin is worth? And I really got to the sense of like, Bitcoin's at least worth gold. And at that time, gold was obviously much, much less, but if Bitcoin was equal to gold from a market cap perspective, gold's around 22 trillion today, Bitcoin would be over $1 million a coin. So it's like, okay, so that's a, massive, massive discount if I can get it at 40,000. But what really drove the urgency is I started hearing Eric Balkunis and James Seyffert from Bloomberg talking about, hey, we think that this spot Bitcoin ETF is on the horizon. Now, this was late 2023. And the consensus in the media was this thing's not going to get approved by the SEC. It's been denied before. It's going to be not denied again. And as I started listening to them and kind of understand, like, no, this is coming. I think this thing's going to get approved. The SEC lost their lawsuit, with Grayscale, and I think it's going to move forward. So I wanted to urgently start to acquire Bitcoin, and I ended up being correct. And then saw Bitcoin, hit an all-time high before the halving of 73,000, which was surprising. Didn't hit 100K as quickly as I thought, but my fear was this thing's going to be 100K before Christmas, So that's why I tried to move quickly to acquire some Bitcoin. But yeah, it's really just understanding like, what do I think this thing is worth? And I think when you take a TradFi kind of view of it, of like, oh, it has no cash flows, it's not worth anything. Okay, well, is it a new monetary asset potentially like gold? Okay, well then that gold doesn't have cash flows either, but yet it's worth $22 trillion. And if I think Bitcoin's at least worth that as a base, and it's way better than gold, so it'll be multiples of gold at some point in the future, this is a bargain. Why am I waiting?
Yeah, absolutely. It does feel like TradFi is kind of like a robot initially, a lot of them when they're trying to understand Bitcoin, because it doesn't follow a lot of these metrics that they're used to evaluating the worth of things. So it's like cannot compute, but then they keep seeing number go up. They do their research. I mean, Michael Saylor and Strategy only started buying in 2020 and they've got 630,000 or whatever now. So you do the research, you understand that the principles of Bitcoin are so sound, and that's what makes it, the hardest money ever. And it makes me wonder, as someone like you who's also an educator, when you teach students about Bitcoin alongside AI and quantum computing, What do you kind of feel is the aha moment where they start to realize that Bitcoin isn't just some passing fad?
Yeah, well, what I do, so I taught on emerging technologies. So I'm talking about a whole range of things that are out there in being adopted in various levels, like, augmented reality, virtual reality, all these things, quantum computing being far off. But when I talked to them about Bitcoin, and honestly, as I was teaching, I was growing and learning too. And I really involved to a message of, hey, there's Bitcoin out there, which is really the future of money. It's a digital commodity, an asset without an issuer, right? So it is absolutely unique and stands alone. It's finite. It's the first scarce asset in the history of humanity. It is unique. Over here, you have all of the, and again, I'm a Bitcoiner, I'm a Bitcoin maxi, but I don't poo-poo all of the other projects. I just say, hey, over here, think about them like startups, right? Or like software projects, things that you could invest in. So whatever, Ethereum, Solana, all these things, they have their utility. Great. I'm a free market guy. If the market finds value in the utility that they provide, they will have some kind of monetary value. If the market does not see value, it won't. And so that's where you've seen Bitcoin, of course, hit all-time highs multiple times throughout the year, and Ethereum is still working towards it. So that's kind of how I taught my students. I didn't try to say like, hey, one's good, one's bad, but I did try to say like, Bitcoin and crypto are two fundamentally different things. Yes, there's some similarities in technology, but if you think about them over the next 100 years, very different assets.
Yeah, I think that's a really apt comparison because I agree with you. There's kind of Bitcoin and there's everything else. And I think the startup route is a really great way to kind of talk about a lot of these altcoins out there. There is some value to some of these and some of these projects. But again, just like any startup, you just don't necessarily know how it's going to play out until it plays out. So people chase those high alpha plays in startups, and they do it in crypto too. It's not that unfamiliar to us when you put it in terms like that. We got to let you go here in a sec, but one more thing I'd like to talk to you about is I want to talk about Donald Trump. He has openly said that he wants 1 million Bitcoin on the reserve. From your business and strategy background, how do you think that would even work in practice? Do you have any thoughts on that?
Yeah, it's going to be really interesting. So there's a few different ways to put Bitcoin, on the balance sheet. I think one is, of course, Cynthia Lummis's Bitcoin Act, which would have, revaluing gold certificates, as we talked about earlier, and taking some of that to acquire Bitcoin. There's the Exchange Stabilization Fund. You could tap into that. So there's a lot of different ways that he can do it. The biggest question I guess I have in my mind is, if you're going to acquire that much of the network, right? Are you going to do that in a very public, open way? I mean, yes, he's already kind of said we're going to do it in order to get kind of Bitcoiners on board with his campaign. But now when it comes to actual tactics, how do you do that without driving the price up into the moon and then dramatically increasing the cost of the government to do that? I think when I step back and I look at this administration, I think about how Treasury Secretary Bessent is kind of approaching everything with this mindset that we're going to change kind of the world order, right? You've been seeing the tariffs, you've been seeing how driving different trade agreements with our various partners around the world. Clearly, there's a bigger strategy at play behind the scenes to really reorder things, because being the reserve currency of the world with the US dollar, that's not sustainable. I think the administration knows that. We've been dealing with Triffin's dilemma, which of course, because we have the world's reserve currency, our main export instead of being manufacturing is now dollars. We've hollowed out our manufacturing base, and our people, as a result, our citizens are struggling through that. So they recognize that that's not sustainable. They want to make the bottom 50%, a bit more whole, and they have to figure out how to thread that needle. And one of the ways we can do that is maybe we're not the reserve currency. We'll see if that adjustment happens. And then we maybe back our country with a real asset like Bitcoin, as we had gold. So do we go to some kind of a Bitcoin standard or some kind of hybrid standard? Do we move to maybe trade that's backed in Bitcoin? I don't know. That seems a little too extreme in my mind, because when I watch what they do, they're very interested in stable coins. Like, see what the first bill of the three between, Clarity Act, Genius Act, Bitcoin Act, what was the first one they ran with? They ran with the Genius Act. So obviously they still want the dollar out there in some way, but they know it's not sustainable. So they're going to have to figure out some way that, yep, let's keep that runway going, but really we're going to have to back our currency with something hard. I mean, it's just this charade of having only fiat is just not going to be sustainable.
Yeah, I can't even comprehend what the strategy would be for doing that, because it feels like this kind of financial tightrope and regulatory tightrope walk where you're blindfolded, and also everything's on fire beneath you, and that fire is being ignited by the US dollar. So I really don't know what to think about it, but we'll leave that to those guys. They got some smart people over there. I'm sure they'll figure it out. So, Mr. Lee, we've really enjoyed our time with you today. You were a lot of fun. I'm sure there are plenty of people in our audience who are like, man, this Mr. Lee guy knows what's up. I need to get more of his hot takes. What's the best place our audience can follow you, what you're up to, and what you're talking about on the interwebs?
Yep, just track me down on X, at Lee Winbush, and I'll just keep sharing my thoughts on Bitcoin, Bitcoin Treasury companies, and where money is going.
Love to hear it. Awesome. Well, Mr. Lee, it's been an absolute pleasure today. Thank you so much for joining us on today's episode of the Blockchain Report. You are certainly welcome back to talk shop with me anytime, and I hope you take me up on that offer, my friend, and I hope you have a great weekend.
Yeah, I'd love to come back. Have a great weekend. See you, Hank.
You as well. Thank you. Cheers. All right, we're taking a quick break, but when we're back at the Blockchain Report, we will be joined very soon by our extra special second guest today. Well, they're both extra special, but he's our second extra special guest, and that is Mark Moss. You won't want to miss him, so stay tuned. More Blockchain Report coming back right to you after this.
Security matters. Zappo Bank.
Yeah,
The only
that
way
went
to
well.
bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to the Blockchain Report. In this morning's Bull Run, we will be joined by our second guest of the morning. This gentleman is an investor and a YouTube sensation who's been chasing trends since the 90s, from scooping up foreclosed real estate to riding the dot-com boom to going all in on Bitcoin before most of us could even spell blockchain. He's built businesses worth 7 and 8 figures, lost it all, bounced back, and somehow still finds time to explain the entire financial system in a way even your drunk uncle at Thanksgiving can understand. He's a best-selling author, a YouTube powerhouse with nearly 20 million views, and the host of one of the biggest shows in Bitcoin and macroeconomics. Please give a big Blockchain Report welcome to the man behind the Mark Moss Show, Mr. Mark Moss. Mark, welcome to the show. We and our audience are thrilled to have you. How are you this morning?
Awesome, but I do have to correct you a little bit here. It's not 20 million views, it's about 100 million views. But anyway, yeah, thanks so much for having me.
I hate to undersell it. No, I appreciate you correcting me on that. That was bad info. I'm going to fire that intern who helped me with it. But we are so pumped to have you on the show today, Mark. Really quick, before we get into the thick of it, for anyone in our audience who hasn't come across your work yet, you've built businesses, navigated some of the wildest financial storms, and become one of the strongest voices in Bitcoin. When people ask you what you do, how do you usually introduce yourself?
Man, that's one of the toughest questions in the world to answer. You know, it typically depends on who I'm talking to. So it's like, who am I talking to? And then I can sort of give them the answer that probably fits their worldview. It depends on how much time I have. Maybe it's a very simple question. I'm in finance, for example, right? So it kind of depends. You know, you mentioned obviously a lot of things that I'm working on. I don't like to be known as a YouTuber or a creator. I mean, I'm a business owner. I'm an entrepreneur. I'm a founder. So I still own and operate multiple businesses. I've sold multiple businesses. We just launched a new publicly traded vehicle. I'm a partner at a venture capital fund, so we invest money. And then I make YouTube videos. I do podcasts and things like that. So I love to do it. I love to learn it. So there's 3 levels of learning. I love to learn it, and then I want to do it, and then I want to teach it. And so I do all those things. And so I'm constantly learning new things. I'm constantly applying new things. And then I'm teaching those things to everybody on YouTube and social media.
That's amazing. And I'm sure, there's 100 million people or views that have shown that people really love the information that you're bringing out there. And YouTuber kind of has a weird connotation with it. I don't see you doing dances or anything. You're actually providing real value to the world. So we certainly appreciate you and your efforts for that. We got a lot to go over today, my friend. So hang tight for just a sec. We're going to go over this next story, and then I'm going to bring you back, and we're going to talk about it. Sound good?
Let's do it.
Let's rock. All right. Well, Van Eck has released its mid-August chain check, and the headline is subtle. Bitcoin will hit 180K by the end of the year. Because apparently we're all supposed to plan New Year's parties with 6-figure Bitcoin as the champagne budget. Now, the firm admits macro events or profit-taking could mess with that timeline, but they don't care. They're doubling down like a Vegas tourist on their last $20 chip. According to Van Eck, Bitcoin's last all-time high was perfectly timed. 92% of coins on chain were already profitable before the spike. That means nearly everyone was in the green and feeling a little smug. Exactly the cocktail needed to fuel more buying. They also point out that corporations keep backing up the truck. Strategy's endless stacking hasn't scared them, it's encouraged more. Ethereum's been soaking up inflows too, but Van Eck says Bitcoin's still the safer institutional bet. Even the collapse of Ordinal's activity didn't faze them. Apparently, losing a gimmick isn't a crisis when corporate capital keeps flooding in. Mining? No worries. Difficulty is at an all-time high, yet revenues are soaring anyway. Van Eck even name-dropped TerraWolf, which pivoted away from Bitcoin partially, but shrugged it off like, it doesn't really matter. And the US mining sector now controls a bigger slice of global hash rates, so more centralization, but Van Eck's fine with that too. Of course, they did admit one possible problem. Corporate treasuries could be the weak link. If Bitcoin gets boring and volatility dries up, treasuries might struggle to raise cash for future buys, which could, ironically, trigger the very downturn that nobody wants. But other than that minor apocalyptic scenario, everything looks totally great. So in summary, Van Eck thinks Bitcoin is headed to 180K, unless of course it isn't. But if it is, you heard it here first. All right, we're bringing Mark back. Mark, Van Eck says Bitcoin can hit 180K by Christmas time. Do you see that as realistic, or is that just headline hype?
I see it as a realistic target. Obviously, we don't know what that price will be, but I see it as a realistic target for any number of reasons. Obviously, they've given some good ones, but we can look at like past performance as well. And so we can see where we would be at. There's a handful of on-chain indicators that we can look at. Of course, we get the technical analysis indicators like Fibonacci lines, et cetera. And typically when you sort of look across a spectrum of different indicators, you get somewhere around a 140 to 220 price range. So that seems to be 170, 180 is about right in the middle of that range. And so I would say it seems pretty realistic. Will we get there? We don't know. But certainly based off of historicals, based off technicals and on-chain indicators, it looks like it's very likely.
Yeah, love to hear it. And there's some interesting things going on right now too. Mining difficulty is at record highs, but miners are remaining profitable. What does that tell us about the health of the network right now? What do you think?
Yeah, well, it tells us it's extremely healthy. And so what happens is, if you would imagine like gold, if gold hit $10,000 or $20,000 an ounce, more people would go mine gold, but you'd get no more gold out of the ground. What happens with Bitcoin mining is if Bitcoin goes to 1 million or 5 million, more people would mine Bitcoin, but you wouldn't get any more out. And that's what that difficulty is. So it shows the amount of people that are competing for that Bitcoin. But the reason why they're still remaining so profitable is that even there's more people mining it, but less Bitcoin coming out, the difficulty going up, the price of Bitcoin is making new all-time highs. And so as long as the price continues to go up with the difficulty going up, then it continues to stay profitable. Now, for a lot of people that don't maybe understand this, we have the publicly traded miners, the Mara, the Riots, et cetera, and they're profitable, and the stocks have done okay. Some of the wind has been sucked out of their sails because of Bitcoin treasury companies. But you can mine a Bitcoin if you were to do like a self-hosted mining platform through a Blockware or something like that. You pay for the cost of hosting plus electricity. You can mine a Bitcoin for about $50,000 or $60,000 today. And so, of course, they're whatever we're 115, 120-ish range. That's pretty good.
Yeah, I think it's a pretty good ROI if I ever heard about it, but we'll see. There's a lot of financial doomsday turmoil coming up on the horizon, according to our next story here. So hang tight, we're going to talk about it because Robert Kiyosaki, author of Rich Dad Poor Dad, is once again sounding the alarm about a looming financial downturn. This time, he's warning that stock market crash indicators are flashing red, and he's doubling down on Bitcoin. For more than 2 decades, his book has circulated globally, translated into over 50 languages and selling millions of copies. His latest warning reinforces his long-standing preference for non-traditional assets. Posting on social media platform X earlier this week, Kiyosaki stated, "Stock market crash indicators warning of massive crash in stocks. Good news for gold, silver, and Bitcoin owners. Bad news for baby boomers with 401ks. Take care." Now, analyzing market behavior, he argued there are unmistakable signals of an impending collapse in equities. He emphasized that those heavily weighted in stock-based retirement accounts, particularly the baby boomers, may face outsized losses if current valuations deteriorate. Pivoting from standard asset allocations, Kiyosaki supports commodities and digital currencies as strategic buffers against macroeconomic dislocation. He describes gold, silver, and Bitcoin as real money, and he regards them as shields against both inflationary erosion and fiat currency depreciation. His recent increases in Bitcoin holdings reflect what he calls a broader strategy to exploit long-term systemic flaws in conventional financial instruments. The famous author predicts a $1 million Bitcoin surge as fiat currencies face mounting collapse. He casts doubt on the sustainability of U.S. fiscal and monetary policy, pointing to unchecked federal spending and central bank intervention. And he argues those policies have undermined the value of the dollar. And he characterizes Bitcoin as the people's money, or in his words, it's an alternative to centralized systems that are prone to failure. Rather than rely on paper-based assets, Kiyosaki is advocating a shift toward hard and decentralized stores of value, and he believes that shift is necessary to prepare for what he calls an unavoidable financial upheaval. Ooh, we're bringing Mark back. Mark, Kiyosaki is warning about a stock market crash. Do you think he's onto something, or is this just the same message that he always delivers?
Well, he's certainly onto something. So we have to kind of dig through the hype and get to the actual data here. So first of all, I love Robert Kiyosaki. I read all his books growing up. He was my mentor for books, and now he's become a good friend. We get a text message back and forth. I've been on the show many times. He's older. He's not as in tune into the weeds as you and I are every day into the news. So take it for what it's worth. However, he wrote a book, a dozen years ago or so, called The Prophecy. And he was explaining how there would be this market crash. And some of the indicators, the reasons that he gives for the market crash was that there was a law passed in the 70s, RISA, which basically allows boomers to invest tax deferred. So all of this money went into the 401ks, et cetera, into a tax-deferred accounts. But the law states that when they hit retirement age into their 70s, they're forced to pull the money out. And the reason why they're forced to pull the money out is because the government wants the taxes. And so what happens is, as he claimed in the book, is that you had the baby boomers, the largest segment of the population, all passively investing into the stock market, building that up tax deferred, and then they would all be withdrawing around the same time, and there'd be more selling pressure than there is buying pressure behind that. I think as Bitcoiners, we can understand that that actually makes perfect sense. The millennials and the younger generations, they're not as into buying stocks. They're not into the TradFi world. They would rather buy Bitcoin and hard assets. And so you could easily see that the supply demand of buying and selling of stocks is going to be greatly off. And so, of course, that drives prices, number one. Number two, we can look at some other things. So obviously, we have the rise of Bitcoin. It's the best performing asset in history. Over the last 15, 10, 5, 3, and 1 year, it's crushed every other asset. And so it's also pulling boomers' money out of the stock market and into Bitcoin as well. And then we saw Trump just pass an executive order, or put through an executive order, I think it was last week, where he basically wanted to change the way, or the requirements and regulations around how you can invest your 401k. So right now, a 401k is basically locked into typically equities and things like that. You can't buy alternative assets. Alternative assets being real estate, private equity, and of course, Bitcoin and crypto assets. And so Trump put the executive order in, which then even means more money from 401ks that's still locked in there could come out of traditional stocks and into alternative assets. So we can see there's potentially lots and lots of selling pressure against stocks for all of those reasons that he's called out. At the same time, it's rotating into hard assets, as he said. Gold has been on a tear. Bitcoin's on a tear as well. Now, I do want to just caveat this, and I've given the reasons sort of behind what he's saying. As far as like an epic crash, like this 92% crash, we see, Harry Dent Jr., for example, he's been calling for a 92% crash for like 12 years, and it hasn't come. I've been calling for something I call a crash up. A crash up is similar to a crash. The outcome is the same. My purchasing power goes down. However, prices keep going up instead of prices going down. That's what a crash up is. And so I don't expect there's this like, oh my God, Armageddon crash where everything plunges. What I do expect is, again, the selling pressure to continue to be more than the buying pressure. The prices will continue to trend down, especially in not dollar terms as much, but in Bitcoin terms. And so that's what Robert Kiyosaki means. I agree with him on that point.
Yeah, no, I hear that. And he also says that with this impending crash, boomers with 401ks are in some serious trouble. Do you think Bitcoin could realistically be a lifeline for that generation, or are they late to the party?
No, 100% it can be their lifeline. As a matter of fact, they all need to get off that sinking ice cube of a ship, the Titanic that's going down, and get into the Bitcoin lifeboats as fast as they can. It's not too late. It's one of the most common things we as Bitcoiners hear all the time, like, I wish I would have bought it sooner. I feel like I'm too late now. The crazy thing is that we typically buy stocks, Tesla, Apple, Google, based off of how much we think they'll be in the future. But so for some reason, we're always looking at Bitcoin in the past. So is it too late for the boomers? Absolutely not, right? They can still get off of the sinking fiat-denominated assets into the lifeboat of Bitcoin assets, and they can save their retirement right now. And so with Trump doing this executive order, he's going to allow them to do that without having to pull it out of the 401k, pay the penalties from early withdrawal, the tax penalties, et cetera. So it's a massive lifeboat for the boomers.
Mm-hmm. And there's a lot, of course, Kiyosaki mentioned this $1 million Bitcoin price target. We've heard it from him.
Yeah.
We've heard it from a lot of people. Do
Sure.
you think predictions like that help Bitcoin by bringing it attention with those big numbers? Or do you think maybe it hurts it by making it sound unrealistic to those that just aren't really informed about it yet?
Yeah, I've been behind some of those big predictions as well. There's been plenty of headlines with my name and my price predictions out there as well. I gave a closing keynote at Bitcoin MENA last year in Abu Dhabi, and I broke down the math of where I think Bitcoin will be in 2030, 2040, and 2050. And if you don't understand the math of how we get to those numbers, it sounds unbelievable. And they run a headline saying, Mark says by 2040 or 2050 it's this price, and it makes me look like a crazy person, to the point that you're making. However, I would say that it's, if you don't understand, I'm like, no, you can't show that number without the math. You have to understand the math. But what I would say is it's certainly helpful, in my opinion, not hurtful. And the reason why is what I said earlier. It seems like the number one thing I hear from people who, what we call no coiners, who don't have Bitcoin yet, is they think they're too late. I wish I would have bought it 10 cents or $10 or $10,000, and I missed it. And so I think it's important for them to understand the potential of, we're certainly going to 1 million, and then we're going to 15 million, and then we're going to 50 million. And so it's not too late to pay whatever, 112, 115 for an asset. That'll be $1 million potentially in 5 years. And so I think it's helpful. Without the proper context, it could be alarmist, but I agree with those numbers and those projections.
Yeah, I mean, I do too. The math kind of speaks for itself. What do you think, though, causes people, the uninitiated, to say that they're too late? Because as we talked about earlier in the show today before we had Jan, if I could have told you, hey, I think this asset is going to go 10x in the next 10 years, and I was saying it was a stock to a traditional financial advisor, they'd be like, yeah, let's put it all in that. That makes a lot of sense. And you don't need to buy a whole Bitcoin. So what do you think is the issue here for the uneducated about Bitcoin? Is it a unit bias problem? Like, what is it? Is it just we need to do a better job of educating? And you're somebody who's on the bleeding edge of that space of educating people about finances, about Bitcoin. What do you think needs to happen for people to wrap their heads around what's really going on in front of them right now?
The key thing for people to understand, to wrap their head around where Bitcoin is going and stop looking in the rear view, is to think forward, like they would with most traditional assets. And I think there's 3 different things that I think hold people back from this. So number one, they see the enormous gains that people got in the past, and they hear about those things. And so unfortunately for a lot of people, they live with this victim mentality, like, oh, I missed out, woe is me, and I can't win. And so I think that's like this victim mentality rather than going, wait a minute, well, what is this? And why did it go up so much? And where will it go into the future? So instead of taking control, they just think, I never have the luck, I missed it. Now, we saw the same thing happen through other technological revolution cycles. So the last 50-year cycle started in 1971. And we saw companies like Intel that make microchips, Microsoft. We saw Apple computers go up 50,000 to 1,000,000% in the first phase. And then investors thought, oh my gosh, I missed it. I wish I would have got in. I never make it. And then they went up another 20, 50 million% after that. And so this is unfortunately normal behavior in these technological revolution cycles because people don't understand what's going on. And so that's number one. What I'd say number two is I believe it's also somewhat of an attack by the crypto industry overall. And so really, if you look at now I believe on CoinMarketCap, there's about 16 million cryptocurrencies that are competing against Bitcoin. And in order to compete against Bitcoin, I have to be more decentralized, or I have to be faster, or I have to be cheaper, or I have to be the next Bitcoin. And so people have been hearing this next Bitcoin, next Bitcoin. You missed the boat, you missed the boat, get the next one. You missed the boat, get the next one. You know, we're smaller, we're cheaper. And so I think there's been a lot of that programming where people think, well, let me go find the next hottest thing. So I think that's number two. And then number three, I think there is the unit bias. So as you said, you don't have to buy a full Bitcoin, but a lot of people don't understand that. Actually, surprisingly, very few people understand that. So they look at the price of Bitcoin and go, I can't afford $115,000, thinking that you have to buy a whole one. But I say it's sort of like a bar of gold. A bar of gold is about 400 ounces of gold. You don't have to buy 400 ounces of gold. You could buy an ounce or a gram or even part gold. And so I think there's that. There's the education around the unit bias. There's the education around where it's going into the future. And it's the person's mindset shift to get off of this victim, I never make it, I can never be lucky mentality, and start to try to understand the education of where it's going.
Yeah, I think that makes a lot of sense. And, you know, people I think initially associated Bitcoin with these parabolic rises and stuff right now. But now we're at this era where it's slow and steady wins the race, and people think, well, it's at 100 thing, you know, I'll never be able to afford, like you said, but the tides are changing, and this is morphing into something that we always thought it would be, and more of a store of value akin to gold, rather than a lucky lotto ticket, and you're just hoping for a big pump. And that actually brings us to our next story here, Mark. So hang 10, I'm going to talk with you about this one in a sec. It's a fun one. Because speaking of lotto tickets, somewhere out there, a lone miner with a rig in their grandmother's basement just became $371,000 richer, as a solo miner successfully mined block number 910,440 on Sunday, bagging in over 3.137 Bitcoin in rewards and fees. That's 3.125 BTC from the block subsidy, plus 0.012 Bitcoin in transaction fees across nearly 5,000 transactions. They were using the solo CK pool, which is basically the Powerball of Bitcoin mining. Your odds of winning are microscopic, but if you do, you get the same prize as the big guys. How microscopic, you ask? Well, with 1 petahash of hash power, you've got a 1 in 650,000 chance of solving a block every 10 minutes. And yet, it happens. In fact, this is the 4th time this year a solo miner has hit pay dirt, including one that happened back on July 27th. They raked in around 373K. Meanwhile, professional miners are getting squeezed by rising difficulty, which is hovering near all-time highs, and that's why many large mining companies are diversifying into AI and high-performance computing. Because in this economy, apparently, even miners need a bit of a side hustle. But for the little guy with efficient gear, the Bitcoin lottery is still alive and well. And every time one of them wins, it proves the point that Bitcoin doesn't care who you are. Whether it's a billion-dollar corporation or a random nerd in a basement, the rules are the same. The rewards are real, and the network keeps on ticking. Which is why the smartest lottery ticket you can hold isn't Mega Millions, it's Bitcoin, baby. Bringing Mark back. Mark, a solo miner just won 371K block of Bitcoin. Does this show Bitcoin is still a level playing field, or was it just luck for this fine fella?
Well, it certainly was just luck for this fine fellow. Like I think you said, it's sort of like this lottery ticket. And, you know, recently the Bitcoin conference was in Las Vegas. And so you're walking around Las Vegas and you see all these people sitting at the slot machines and you see the cars up there that you can win. The reality is, pretty much no one's going to win that car. The chance of hitting the lottery or the big jackpot is slim to none. But you hear the coins in the background, and once in a while somebody wins, and so it kind of gives you that feeling you can get it. So it certainly was that lucky break. Now, to answer the question, though, that you ended with, which is it a lucky lottery ticket, or does it mean that the average person is still decentralized, the average person can still compete? And so certainly to be a solo miner and win a $300,000 reward is a lottery ticket. However, it is still democratized, and the average person can still take a piece of this. Anybody can go buy a computer and plug it in and earn Bitcoin. Just like you could go dig a hole and find gold, maybe dig a hole and get oil. Anybody in the world can get oil or grow wheat or dig for gold. And anybody in the world can get a computer, plug it in, and get Bitcoin as well. Now, what typically people do, though, is they don't solo mine it on their own. They plug it into a mining pool. And in that mining pool, you collectively organize all of the hash power, computing power together, and then you split the rewards of that. So it's like a co-op, if you will. Now, as I kind of said earlier in the show, there are platforms that allow me to do self-hosted mining where I can go with a company that will actually run the server for me, because I live in California. Electricity is way too expensive. I would not be profitable to mine for Bitcoin. But I can co-locate it in a facility where power is much cheaper. And then it goes into a pool, and I can still make a good amount of money. As I said, right now it's somewhere $50,000, $60,000 to mine a Bitcoin. I can still compete. I can still earn Bitcoin. So two-part, yes, 100%. It's a lottery ticket. I'm surprised these people, they probably mine for years, maybe never make one, one reward subsidy. And some people win the car in Vegas. However, most people can still compete. You can still buy the computer. You can still do it.
Yeah, it can be a really expensive hobby, or what you do by yourself, or you can just join a mining pool. I used to mine. That's how I got introduced into Bitcoin back in like 2016, and I was part, I think it was called Ant Pool or something. And it was a fun little time, but all dreams come to an end eventually. But it was fun. All right, we're going to go to our next story here, so hang tight there, Mark. We're going to bring you right back here in a second. I just got to get to it. All right. So our next story here, an investor, lost 783 Bitcoin worth $91.4 million to a scammer impersonating a hardware wallet. The attacker tricked the victim into handing over wallet credentials on August 19th. Once inside, they transferred the Bitcoin and routed it through Wasabi Wallet, the privacy tool often used to conceal transaction trails. Blockchain investigator Zach XBT confirmed the theft. He called it one of the largest individual social engineering scams in recent months. It adds to an already brutal year. In the first half of 2025, investors lost $3.1 billion to hacks and fraud, and increasingly scams are shifting from technical exploits to social engineering, tricking people instead of systems. This attack happened exactly 1 year after the $243 million Genesis creditor hack. That hack led to arrests in California earlier this year. Now, both incidents highlight that the attackers aren't always beating code, they're beating people. Authorities are sounding the alarms as well. North Wales police warned crypto holders after another victim was defrauded of 2.1 million euro in Bitcoin. And in this case, criminals impersonated senior police officers, claimed a phone with the victim's ID had been seized, and pressured them into handing over the BTC. The force called it sophisticated and urged vigilance. This is the ongoing risk here. Even as technical safeguards improve, scams thrive on human error. Impersonation and phishing remain nearly impossible to prevent completely. Meanwhile, Bitcoin itself remains immune. It settles exactly as designed. Final, irreversible, uncaring, which is what makes it valuable, but also merciless when the human side of it fails. Bringing Mark back. Mark, an investor just lost 783 BTC to a fake support scam. Is this the perfect example of Bitcoin is secure, but people aren't? What do you think?
It is a perfect example of that. And unfortunately, a lot of people confuse that with the Bitcoin network not being secure. But it's not the Bitcoin network, it's the people, unfortunately. In most cases, it's human error. And unfortunately, this is extremely sad. And while we can sit here and talk lighthearted about it, unfortunately, this is just terrible news. And typically, I mean, I hate to say it, but a lot of times it's maybe the older generation, the boomers that fall for this. But I have friends, I know people personally that have also fallen for these types of things. And unfortunately, with AI getting so sophisticated, this is only getting more and more prevalent. And so it's terrible news. And so people need to be extremely vigilant. I mean, number one, don't click on any links. If somebody calls you or emails you, don't click on a link. Just go into your account and just check and see if there's any messages. Like, number one, I mean, come on. If somebody calls you pretending to be someone, whoever from your exchange or whatever, asking for your password, like, don't give it to them. You can just log into your exchange and see if there's a note there. Same with an email. You get an email, don't click on a link. We see this with all types of phishing schemes. Recently, there's one just this week going around that I've seen people warning about, which is for Celsius. So a lot of people had money on Celsius, the exchange, lending platform, et cetera, that went down through bankruptcy. They've been giving some of that money back, and they've been sending out these phishing emails saying, hey, there's another distribution, click here to receive it, and then it's draining people's wallets. And so it's extremely sad. It's extremely prevalent. And it's only going to get worse. So don't click on links. Don't give people over the phone your passwords. If you get a message like that, just go log into your account and check it out on your own. But it's not the end of this.
Yeah, no, you're totally right. And they are getting so darn sophisticated, and AI certainly isn't helping with that. I actually had an experience earlier this year where I got an alleged call from Coinbase, and the day before I received a text being like, you had unusual activity. Then I
Right.
didn't click on that link. Then I get a call and they knew a surprising amount about me. I talked to the guy for a half hour and then he's trying to get me to click on a link that he sent. And I was like,
Yep.
nah, buddy, like there's no way. And that was
Yep.
definitely a scam. So be careful.
Yeah,
out
and
there.
and people need to be aware of this because recently there was a major hack at Coinbase. And so when they hacked Coinbase, they
Yeah.
got all the user data. So probably that's why they had so much information. And unfortunately, they have maybe potential home address information on people. So they're going to have a lot of the information. But, most of us have probably gone through something like this. Like when I call my bank, for example, they want to verify. So they'll have me log into my account to like verify something. But they have me log into my account. They don't send me a link to click on, right? So we have to kind of just be aware of these things. I also, man, it's a pain in the ass. I hate that every time I go to a new website, I have to 2FA, I have to pull up my phone, I have to verify this. It's such a pain in the ass, but that's how we secure things. And unfortunately, with the rise of these sophisticated scams, with the rise of AI, it's only going to make it worse. Now, the reason why I hate this, but maybe the silver lining in this is it shows how susceptible to hacks. It shows how fragile centralized databases are. All databases have been hacked. Even the NSA was hacked. And when they hacked the NSA, they stole the NSA's hacking software. I mean, we see this so prevalent today, and it shows why something like Bitcoin is so powerful. A decentralized database, a decentralized network that's open source. It's open, it's transparent. It's permissionless. Anybody can join. And yet we have over $2 trillion sitting in the open for hackers to come and get, and it's never been hacked. And so while we continue to see how fragile these centralized databases are, we continue to start to see the importance of what these decentralized databases are. And the world will shift. We'll get there eventually. But unfortunately, we have to kind of see the pain of the problem, and the pain has to be enough to get us to be able to shift and move to something else.
Right. No, that's a good point. I wonder how far this is going to go, right? Like you said, we have 2FA, which is annoying. It's like, where are we going to have to, where does it stop? Are we going to eventually have our phones like pinpricking us for a blood sample or something like every time in addition to a face scan? I don't know. But with, all the technology we're getting is great. I love a lot of parts about AI, but then of course, you got a lot of bad actors out there and, scammers, they're going to use that for less than, how do I put it? Just for more insidious type of thing. So it is what it is, unfortunately. So, protect yourselves out there, gang.
Yeah, definitely.
All right, Mark, I think it's time that we're going to jump into our deep dive with you, my friends. So guys, let's roll the stinger and get into it. All right, we're back with Mark Moss and our deep dive here. So Mark, I want to get into your background a little bit and what you've been up to lately. I want to start a little bit with your career journey, as you've had a super unique journey. I mean, you were buying up foreclosed houses back in the day. Yep. You jumped into .com stocks, you rode that wave, and then you crashed down with the rest of us in 2000. Yep. Looking back at your journey, what's the biggest lesson you've learned about spotting hype versus spotting the real opportunities, and how did you apply that when you first got into Bitcoin?
Yeah, that's a great question. What I would say is that you have to understand what's going on so you can get your own conviction and build your own thesis and not get swayed by what's going on in the marketplace. So I talked about earlier about sort of the hype about these Bitcoin prices and if it's harmful or helpful. And I explained that I think it's helpful because it kind of shows you there's this hope, but you need to go in and do your own research. And so, for example, when I started in the .com, as you said, in the .com era, I launched an e-commerce business in 2001, right after the .com bubble had crashed. And it was not easy to build a website. You couldn't go onto Shopify. There was nothing like that. So I had to hire a coder and et cetera. And I built this website and I went to these companies and I said, I want to sell your products on my website. And they laughed at me. And they told me, no one's ever going to buy anything online. Okay, well, I beg to differ. I built this website. I'll give you the money and I'll just take the risk. And they said, we don't even want our products sold on the website. Because the dot-com bubble had just crashed, there was like this negative connotation to even being on the web. It was this gimmicky thing. So, I've been through that before. And so when the crypto thing came back around and people said crypto will never work, I was like, yeah, I've heard that before. And so to answer your question, how do we see through that? Well, what I like to do is try to break things down to like a first principles level so I can understand them at their core, and then I can start to develop my own ideas on top of that. You cannot borrow somebody's conviction. And so when you're on Twitter or X or on YouTube and someone's saying to buy this crypto asset or you should sell Bitcoin, it's the top, like, okay, you might take that information, but go compare it against your own work, your own thesis that you have. I think that's number one. You have to build your own conviction. The other thing is that's really helped me, and it's one of my biggest mental models and guides, is I look at cycles. Now, cycles are like, understanding history. Those who don't understand history are bound to repeat it. If I touch the hot stove and burn myself, if I touch the hot stove again, I probably burn myself. And so while things change, certainly the world has changed a lot over the last 100 years, they also stay the same. So we have technology that moves things exponentially, but we have human nature. And human nature stays the same. And so we take things too far and we go back and forth. So we have these cycles, and there's all different types. But the main one that I look at is this 50-year technological revolution cycle. I call it a quantum wave cycle. And it's now on its sixth time happening. So every time a cycle repeats, it's more likely to repeat again. And they have 4 distinct phases that they go through. And when you understand how things go through these cycles, you understand the time frame it takes, it gives you like this blueprint to invest through and then what to expect. So for example, a lot of people think that Bitcoin has failed because it's not a medium of exchange. The white paper said it's electronic peer-to-peer cash, but it's only a store of value today. Well, they're expecting too much too soon without realizing that these things take time to evolve, the technology to develop. And so we can use a different couple metrics to do this. But there's this monetary evolution that we can overlay with an S curve, which measures the adoption of the technology, and then over the four-phase cycle over 50 years. And so I project that Bitcoin will become the medium exchange around in the 2030 range, 2030, 2035. That's what I'm expecting. It's too early to expect it to be the medium exchange today. So it didn't fail. People just haven't given it that time frame. So number one, break it down to its core principles so you can build your own ideas off of it. Build your own ideas and your thesis, and use history or cycles or some sort of framework for yourself that makes sense so you can start to develop that framework and you understand what to expect from it.
Interesting. So that throughout your career, it seems like you have a lot of foresight into what's coming, and that seems to come from you researching what's happened in the past. It's kind of like a weird twist on that those who don't know history are doomed to repeat it, but those who don't know history are probably doomed to not know what's coming next either. And you certainly have done the work to seemingly know what's coming next in a lot of your ventures, right? And when it comes to Bitcoin, you're on record as saying that it's more than just nerd money. And I'd be curious, what was the exact moment for you where you realized that Bitcoin wasn't just another tech fad, but it was something that could literally upend the entire financial system?
Yeah. So one thing that I often say that a lot of people that don't understand Bitcoin, I've looked into it, I've done my research, I still don't understand the use case. And it's typically because they don't understand the problem. You see, solutions are supposed to come to problems. So for example, as a venture capital investor, I've been investing in venture capital through the Bitcoin space for over 5 years, but I did venture capital and tech before that. And people pitch me these new ideas. I had one this week that I was going through. And I don't really understand the problem they're trying to solve. And I'm like, I don't really get what you're trying to do because I don't see that as a problem. I don't have that problem. And I asked them, I said, do you have that problem? Is that something that you deal with? Because the solution has to come to the problem. And so when you look at Bitcoin and you don't understand why it has a use case, you don't see the problem. Now, for me, as you kind of said about 2008 sort of getting crushed like everybody else, I had built up several businesses. I had a couple big exits, in tech exits. I had built up a big real estate portfolio. In 2008, I got crushed in the crash like everybody else. And what happened is it forced me to go find the problem. So it's like, dang, I did really good. Like I spotted the trends. I built these businesses. I crushed it. I had big exits. I made a lot of money. I did everything right. But what is this financial system that has all this power over my life that I'm not paying attention to? So that sucked. Let me go figure that out. So I went and I just started just digging into the financial system. What happened? What caused the 2008 crash? What happened with the banks? Where did they get all this leverage? What are these collateralized debt obligations? What is the debt-based monetary system? What is fiat? And all of a sudden I realized, oh, shoot, the problem is fiat currency. The problem is a debt-based monetary system. The problem is the leverage that builds up in the system. So once I understood the problem, I needed a solution. The solution is the opposite of an endless debasing debt-based monetary currency, which is a sound monetary policy, which is gold at the time in 2008. So I became a gold bug. So once I understood the problem in great detail, I could see a solution to the problem. And so sound money, gold became that solution. So when I looked at Bitcoin, it first crossed my path in probably 2012, 2013 as a tech guy. I saw it, but mainly I just saw the price shooting up. It went up to like $1,000, then it crashed. I was like, oh, I'm glad I didn't buy that. But in 2015, I was actively trying to solve a problem. In 2015, I was in the process of setting up a bank account in Panama. I was working on a residency, setting up a trust, and I was trying to move money because the problem I was trying to solve for was I thought the banking system in the US was still fragile. And there was another crash. They didn't solve anything from 2008. It was only worse today. And so I wanted to get my money out of the US banking system and move it to another banking jurisdiction like Panama, Singapore, Hong Kong, et cetera. I was in the process of doing that, already engaged the attorney to do that. And I took another look at Bitcoin. And I said, well, wait a minute. Bitcoin solves the same problem, which is getting money out of the banking system. And so I was able to understand it a little bit easier because I understood the problem. I was actively trying to solve a problem that it served for me. Michael Saylor's story is very similar. He talks about in 2020 that he realized that, well, I can't really grow MicroStrategy, the software business. We're sitting on $500 billion. I see in 2020 that the pandemic happened and they printed trillions of dollars. The money is getting debased rapidly. What do I do to solve the 500 trillion? And he talks about how I went on a hunt. So I looked at gold and I looked at real estate. I looked at buying more business. I looked at all the options, and Bitcoin solved my problem the best. So it really starts with that. What's the problem I'm trying to solve for? And then you spot Bitcoin. And so for me, because I was actively trying to solve that problem, it immediately jumped out to me and I grasped it. And I never ended up going through with the engagement in Panama. I ended up just buying Bitcoin, and sort of the rest is history from there.
Yeah, no, that makes a lot of sense. And you seem like one of those rare individuals who has the ability to look at the world more broadly and then pick out the pieces to kind of complete this puzzle of what the future is going to look like and what those problems might be. We actually have a guy who hosts a show on Roxom as well, Nathan Bowerly, who has a kind of a similar mindset to that always I'm just so amazed by. And it seems like, for instance, with your YouTube channel, you've now been able to bring that information to the masses. So I want to kind of talk about market disruptors a little bit. As we clarified earlier, over 100 million views. Did you have any idea when you were starting it that it would blow up like this? Or did you start like many others out there just yelling into the void until people finally caught on to what you were saying?
Yeah, that's a funny story. And actually, of course, no, I had no idea. And I never started talking about Bitcoin or content publicly to ever get to this point. It was, unfortunately, like you said, I'm one of the guys, or you said that I seem like a guy that kind of sees the big picture. Not everything is done that intentionally, thinking that far out. And so it certainly wasn't. Mm-hmm. What happened is once I figured out Bitcoin, being this sort of freedom maximalist, trying to solve this problem of this government continually debasing the currency and growing. Once I realized about Bitcoin, I had to start telling people about it, but it was mostly just like local people, my friends, family, other people I knew that thought that would be interested in that. But then word started spreading really quickly because back in 2015, 2016, there wasn't a lot of people talking about it. And so I started getting just bombarded. My friend's friend wants to talk to you and so forth, my friend's partner. And I got tired of answering the same question over and over. So I was like, well, let me just put a video up. And it kind of just solved that problem. I never expected it to get to the level that it is. But what happened is once I started making the content, I then started feeling almost like this responsibility for helping people avoid a lot of the problems that I had gone through. Because, I built up a lot of wealth. I lost a lot of wealth. And a lot of my friends that went through that same process that I did, they never recovered. They just never recovered from that. It's difficult to come back from such a big traumatic injury. And I just wanted to help people avoid those same problems. And so I kind of found some fulfillment from making the content. And the rest has been history. And so, yeah, I didn't expect it to get to this level, but it's certainly been fun. And it's opened up a lot more doors. And so now I look backwards and I see the enormous benefit of doing that. We've been taught our whole lives, it's not who you are, it's who you know. But what I found out now, it's not who you know, it's who knows you. And so through the reach of the platform, now I've become friends with Robert Kiyosaki, as I said earlier, right? He invited me on his platform because he liked the content. It's opened up doors for me to now deploy capital and invest through venture capital and help build the ecosystem. Now it's helped me get to this next level where we just launched this Bitcoin Treasury company where we can start to go rescue. We talked about money trapped in 401ks. We can go rescue that money trapped in traditional financial buckets and bring it over into a Bitcoin sound money future. And so it's just opened up these doors, allowed me to reach more people, and it's been an amazing journey.
Yeah, but it's not really a big surprise that you've seen so much success in this space. As someone who's able to kind of solve for a lot of problems, you're also able to kind of, even though you were a little humble about it, you've done a great job of forecasting what we could expect in the future. And one of the things we're seeing right now that I know you're into, and I would love for you to talk a little bit about, is the Bitcoin treasuries. We've seen them be the real narrative of this most recent cycle. And I know you mentioned earlier to me before the show, you've got something going on there. So could you tell us a little bit about that?
Yeah, certainly. Bitcoin was always coming for everything. As Bitcoiners, we dream about this Bitcoin future where Bitcoin fixes the world and Bitcoin fixes the incentive systems and Bitcoin, et cetera. But in order to do that, it has to become the new monetary asset for the world. It needs to become the medium of exchange, the store of value, and eventually a unit of account. And the end goal is to separate money and state so the state can no longer print money. Separating money from state doesn't mean that the state doesn't use money. It means they can no longer print the money. And so that was always the plan. So it was always coming for everybody. It was always coming for businesses and for corporations and eventually for governments. And as somebody who is passionate about Bitcoin and sees the potential future that we can have on a sound money standard, like a Bitcoin standard, I'm working actively to make that future a reality. So whether that's educating people to bring more people into the Bitcoin ecosystem, the next level for me was to invest my own money and raise money to invest to build the companies building the ecosystem. And now what I believe is the next step for me is to go get all of the other people and bring them in. I talked about these technology cycles. And so whether it's, the internet, for example, it's like in the internet days, it was very hard to get online. It was very difficult. You had to get this modem and plug it into your computer and it was very slow, et cetera. And today people use the internet without even knowing they're on the internet. So what happens is with new technology, we have this diffusion of innovation. So it measures how long it takes for people to start adopting that new technology. TVs, washing machines, telephones, et cetera. And what happens is you have the true believers that start in the beginning. These are the people that create the technology and the nerds. And then you have these early adopters. And then we have this chasm that brings in, before we bring in the early majority. Now, the early majority and the late majority come when they use the technology without knowing they're using the technology. And so right now, we have $150 trillion globally in what we call fixed income markets. So if you're a retiree or somebody hoping to retire at some point, you need income. And so you buy some sort of a debt obligation, a bond, a government bond, something that pays you a yield, a dividend. $150 trillion. And it's stuck in pension funds and insurance funds. And it's all behind these different regulatory moats. They can't just buy Bitcoin. And so you hear a lot of Bitcoiners go, I think you just buy Bitcoin. You certainly should. You certainly should. But a lot of people have money in their pensions that they just can't do that with. And so it's stuck in, as we talked about earlier, this like sinking ship, this melting ice cube, and there's no hope for them. So it's the largest addressable market. We're talking billions of people stuck with hundreds of trillions of dollars of capital stuck in traditional financial rails that's losing money to monetary debasement. And we want to get them into a Bitcoin sound money standard so we can save their future. But it's not as easy as telling them to just go liquidate everything and buy Bitcoin. It's just not a reality. And so what the Bitcoin treasury companies are doing are taking Bitcoin, this commodity, this technology, this asset, understanding its sound monetary properties it has, and its potential to go up. And then we're able to thin slice that upside potential and wrap it into credit and debt instruments that allow traditional financial pensions and insurers to buy and get access to Bitcoin. Better yield, safer returns, higher potential, et cetera. And so it's a way that we can bring the world onto that sound money standard without them having to even know they're using Bitcoin. And that's how the technology ultimately gets full-scale adoption and wins.
Yeah. Oh, man. Really appreciate you breaking that down for us, Mark. I wish we had more time with you today. You are just an absolute wealth of knowledge that clearly has taken you a lot of time and effort and trials and tribulations to acquire. So we certainly appreciate you sharing with us today and with everyone on YouTube. If you guys haven't checked out his YouTube channel, please do. Before we let you go today, Mark, I know you probably got to get rolling here soon. Where's the best place for our audience, aside from your YouTube channel, and make sure you give us that handle as well so they can check that out, that we can get more information on you or get your hot takes or maybe the next project you're excited about that you think people should check out?
Yeah, well, certainly. So the new treasury company that we're working with is a UK-based company. It's called Satsuma. The ticker is SATS, S-A-T-S. So definitely check that out. We are going to be one of the top companies in the world. On top of that, we invest money through the Bitcoin Opportunity Fund. It's a venture fund if you're interested in that. But you mentioned I'm on YouTube. I'm not hard to find. Just search Mark Moss. You'll find me on YouTube. I put out a couple videos a week. I speak at all the big conferences. I'll be at Bitcoin Asia here next week. I'll be in Bitcoin Policy in DC next month. So catch me out there. But yeah, just search Mark Moss online. Find me on YouTube. That's probably the best way to keep up.
Amazing. Well, Mark, you are a man who seems to be a lot of places at once, so we certainly appreciate you taking the time to sit down with us today and chat. Myself and our audience are very grateful for you and your ability to see the tea leaves and also educate all of us on this new emerging market that everybody needs to wrap their heads around sooner or later, and you're certainly helping make that adoption happen at a quicker pace than it would if you weren't around. So thank you so much. It's really been a pleasure having you on the show today, and we hope to keep in touch, and I hope you have a great weekend, my friend.
Yeah, thank you so much.
Cheers. Thanks, Mark. All right, we're going to take a quick break, but when we're back, we're going to wrap things up here on the Blockchain Report, so stay tuned. We'll be right back right after this. All right, it's time to wrap things up today with a little Tales from Hodlwood. And again, a special thanks to Mark Moss for joining us on the program today. Make sure to check him out. That guy knows a lot, and he's certainly happy to share it with all of you out there. So best bet you check out his YouTube channel and check him out on X. All right, Tales from Hodlwood. We're talking about Kanye West, or Ye, or whatever his current legal Scrabble name is. He's apparently launched his very own cryptocurrency. Surprise, surprise. It's called Yeezy Money, which is kind of a great name, really. The ticker is YZY, and it runs on Solana. Because when you think of financial stability, you definitely think of Solana and the man who once tried to sell plain white t-shirts for $120. Now, when Ye announced this on X, saying Yeezy Money is here, a new economy built on chain, the hype train went full bullet speed. Within 40 minutes, Yeezy's market cap rocketed to $3 billion before face planting to just over $1 billion. As insiders dumped on retail like it was Black Friday at Walmart. Now, it turns out 94% of the token supply was held by insiders, and just to crank the sketch factor up a notch to Kanye levels, 87% of all Yeezy coin lived in a single wallet before being dribbled out across others. Or in other words, this new economy was about as decentralized as North Korea. Early traders also seem to have insider knowledge. 8 wallets magically swooped in within minutes of launch, dropping $90K each and flipping out with millions in profit in under 10 minutes. One guy even turned $500K into $1.77 mil in the time it takes Kanye to offend someone new on Twitter. Meanwhile, regular fans got absolutely obliterated. Most saw their bags drop 60% almost instantly, with Nansen estimating 20 million in losses. One poor soul even bought the wrong Yeezy token for $710K before scrambling to claw it all back, because nothing screams blue chip asset like the possibility of accidentally buying the wrong knockoff version. And yet somehow high profile traders still piled on in. James Wynn shrugged off the chaos, pointing to Trump's Trump meme coin moonshot and basically saying, why not, Ye? Arthur Hayes reportedly bought in too, because apparently nobody learned a damn thing from BitConnect. The Yeezy Money ecosystem promises things like Ye Pay and Yeezy Credit Card, because that's what every fan has been dying for, is the ability to max out their Kanye branded plastic while watching his coin crash 60%. And let's not forget, in February, Kanye said meme coins prey on fans with hype. Now he's the predator. So congratulations, you're not investing, you're buying a $3 billion bumper sticker for the blockchain. So yeah, we don't like it. So yeah, Kanye West Solana coin is real. It briefly hit $3 billion in market cap. It immediately nuked back down to $1 billion. And if you thought Bitcoin was volatile, wait until Yeezy wakes up in a bad mood. All right, well, that's a wrap for this week's Blockchain Report, boys and girls. As always, thanks for tuning in. And make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on all platforms that matter. And I'll see you again on Monday with more Bitcoin Bedlam. Until then, hodl strong, and I'll see you next week.